All right, boom. So, yo, what's up for y'all on the YouTube replay? I hope you're having a great day. The market is kind of a mixed result today. I have some news about Google and Apple. There was a big partnership over there. Let me just start with my Robinhood portfolio over here. We started the day pretty red. We were down like 0.65%, but now we're slightly green on the day, up 0.07%. And these are all the stocks that I own in here. This is my dividend only portfolio where every stock in here pays a dividend, but they're mostly like dividend growth companies. I want to show you the news around Google real quickly. I mean, this is pretty massive. As we know, or if some of y'all don't know, Google pays Apple literally $20 billion a year to be the default browser, and the courts kind of made them stop doing that. Wait, where's the Google AI news? Well, it's not over here. Let me pull it up on Webull then. But I kid you not, Google got a massive deal with Apple where Google pays Apple $20 billion a year to be the default search browser, and that kind of ended, but now Apple partners with Gemini. So that's pretty cool. Apple's being rewarded because they're not spending so much crazy money on LLMs. They're not trying to win that race by buying a bunch of NVIDIA GPUs. So Apple's the integrator, the one that integrates Google Gemini, and they get paid for it. So yeah, here's my Webull portfolio. We're up 0.96% on the day. Here's kind of my worst performers. I don't know what happened with Dave. They were up like 5% in the pre-market, and now they're down 6%. Like, this is pretty crazy. Yeah, pre-market, they were 250. Now they're 222. The Dave is pretty cheap, though. They're at an 18.8 forward PE if you're kind of looking for a new growth company to potentially look at. Disney's down, Clear Secure, SoFi, Reddit's down a little, but that's no big deal. Some of the growth names are down. But then there's other software names like UiPath is having a great day, up 5%. Futu, my favorite brokerage fintech stock out there, is doing great. AMD's finally recovering. Sprouts Farmers Market's up 4%. No way. It's about time we see a little bit of recovery over there. So let's go over my Moomoo portfolio because this is the crazy thing. We hit a new all-time high today. I can't believe it. Already year to date, we're up 9.3%. I mean, that's already a 1 year of S&P 500 returns we've gotten so far just since January 1st. If we go to the past year, we're up, wow, I didn't realize it was this good. We're up 100% exactly. Where did all those gains come from? Well, first off, Comfort Systems. This has been a massive performer. We bought them during the dip down here. They're at a new all-time high. But the other big winner in the stock I've always been talking about is Amphenol, a super new all-time high. This literally supplies the copper cables for Google's TPUs, NVIDIA's GPUs, and the NVIDIA NVLink spine, all those products. Amphenol's copper cables are used widely, and they just acquired this company, ticker symbol COMM, CommScope, and it's already accretive 15 cents. So that's about, 8 cents a quarter. That's really good. When you look at the EPS right here, just for the rest of the time, their EPS is permanently going to go up like 8 cents a quarter. And I think, and I'm a strong believer in this is why there's more upside in the stock, it's going to be even more accretive to the EPS than the analyst expects. So yeah, this is kind of, so I heard Jensen Huang call this like the nervous system of AI because it really does fuel the whole ecosystem. So this is one of the huge AI beneficiaries. Google is a big customer, NVIDIA is a big customer. So I just love Amphenol. They're a great copper cable solution company, making these high-speed cables. But yeah, Powell Industries, though, this is another crazy thing. They're up 6.6% on the day. They're doing what the analyst or the technical analysis says is a bullish symmetrical triangle. Their rise probability was at 95%, and I guess they're up 6.6%, nearly to an all-time high. I can't believe it. Earlier today, we were up like 400% on them, but we're up 396%, so that's crazy. Hey, what's up, Looney? I hope you're having a great day. He said, CXL Lulu, what's up? How are y'all doing? Hey, let me know if this is the one you're talking about, Looney. Is it called Cal? Is it this Australian company? Ticker symbol CXL. Let me know and we'll for sure check that out. Have you looked at Data Vault? What's the ticker symbol for that one? Duolingo dropped today. Buy the dip. Hey, actually, I really like Duolingo. Wow, they're down 7% on the day. I wonder if there's any specific news here. CFO gives good guidance. The AI thesis is really hurting Duolingo because this is an app where you go to learn a new language. You pay them a subscription to learn a new language, but the AI thesis is, hey, in 10 years from now, will the technology be so good and technology's already here, where like you can live translate what people are saying and it's actually good now, where it doesn't pick up things in the distance, like with the Meta AI Ray-Bans, like maybe in 10 years from now, there will be no need or the demand to learn a new language for other people will significantly drop because they can can just live translate it so good with AI. And I know OpenAI is coming out with like a competitor. So that's why I think the PE has compressed. And the sad part is they're still not super cheap yet. If we look at the forward PE, Duolingo trades at 37 times next year's net income. But we're looking at next year's because they had a one-time adjustment. It says they made 292 million. They didn't actually, but they did have a record, super record, 35 mil profit. And it's just here's why I still like Duolingo, and they're on my watch list to buy the dip on. But check this out. If we go to where this company's revenue comes from, 84% of it is their subscription revenue, and it's booming look at these year-over-year growth rates in the middle. It's all 40 or 50% year-over-year growth rates, and it's all for eternity. So it's not like AI has hurt this company yet. All the metrics are at a record. Like, this is the kind of growth I love to see. This is why they deserve a high forward PE, like a 37. And we go to their advertising revenue, that's at a record up 46%, for the people that don't pay for their subscription. But anyway, yeah, check out the expectations up and to the right. EPS is up and to the right. And same with just basic EBIT, earnings before interest. So I would certainly put this one on the watch list, but I wouldn't full-size position this. Like, if I wanted Duolingo as 5% of my portfolio, I wouldn't make it 5% as attractive as it looks right now. I'd only make it like 1%. I'd nibble on it. I wouldn't go crazy into Duolingo yet because they might still be slightly expensive and this AI thesis might hurt them more. So there might be another 10% downside, but that's about it. I mean, the risk reward's starting to look pretty good. It's kind of like Netflix, where I don't see them falling more than 10 to 15%. Like, they definitely could fall 10 to 15% more, but I don't think any more much than that. So that's a great growth name. Why are the China stocks rallying like crazy? Alibaba. Wow, Alibaba's up 10% today. Futu's doing great. I love Tencent. Alibaba's probably one of the top 5 best China stocks if I had to pick one. Alibaba, this AliExpress is what they own. So they own AliExpress, and they also have been growing their cloud business. Check out the year-over-year growth. It's at a record 5.6 billion. This is in US dollars. We've converted it, but they're growing their cloud business, which should be high margin. All other, that's down a little. Yeah, their e-commerce business, which is AliExpress, is more business to business. They're kind of seen as like a Chinese Amazon. They make great net income. But what's the forward PE on them? 27 forward PE. That's not nuts. That might be a little expensive, but Alibaba is a good one. What app is this? Hey, this is a brokerage right here. Yeah, hey, Chris, if you want to get this app, it's in the link tree in my bio, very first link there. It's a brokerage where you buy stocks on. It's an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get like a little free stock. But yeah, I love it. You get the 3.35% APY. Free app, no commissions, nothing like that. Thoughts on Rolls-Royce UK? Let's check it out. It's RYCEY, right? Yeah, RYCEY. So surprisingly, a lot of people think Rolls-Royce is a car company, but this is no car company. It's really an aerospace and defense company. They make these incredible jet engines. So check this out. 50% of the revenue is actually their aerospace business, their jet products. And so that's their aerospace. And they're also big in defense. 24% of the revenue is defense, power systems. So it's not really a car company. And check out, so this is a European company or British company. So we've converted it from British pounds to USD, but they report in halves, but it's an incredible 6 billion in net income. The entire year of 2024, they did 3 billion. And just the first half of this year, they're at 6 billion. So they're leveraging their balance sheet. Before today, they used to have more liabilities than assets. Now they have more assets than liabilities. The cash from operations, these are great year-over-year growth rates. So actually, I really like Rolls-Royce, and I think they're not crazy expensive. Yeah, look at that. A forward PE of a 29. That's very fair in my opinion. 29 forward PE. That implies this one might go higher. Here's some of the, full year EPS projections because they report in halves. Look at the EBIT. So basically, earnings before, the incredible beat on every metric for the past couple halves. So anywho, these year-over-year comps are going to be great. There's still growth here. I actually really like Rolls-Royce. I put them on the watch list. DVLT. I said I'd get to that one. Yeah, let me get to Data Vault. Then we'll get to ASX. We'll check out ASX. What up, Desmond? We'll check out GDRX. Yeah, if you got any stocks you want to look at, let me know. Remind me to get to Meta too and Planet Labs. I love all these. And what up, Epic Foods, son? Data Vault. Yeah. Dang. So this stock, this is not really what you want to see. They're at a super all-time low right now. The whole market cap is only 499 million. Let's go see if we can figure out what happened here because it's usually always explained by the financials. So here's what you're working with. So they finally have revenue for the first time. Like if we zoom out, they had like no revenue, but now I guess 3 million in the most recent quarter. That's not huge. That's why they're worth 400 mil, but they did 3 million in revenue. But here's the bad news. They've lost 70 million or actually 80 million of net income in the past year. That's like 20. Ooh, that's like 20% of the entire market cap they've lost in net income. So that's why I think there's like kind of real like there's a little bit bankruptcy risk. I think investors are super nervous that they're going to run out of money. I mean, if they're losing 30 mil in net income a quarter, the whole company's worth 500 mil. That's rough. Uh, Hmm. But it looks like there are some good expectations. Like, whoa, actually, check this out. They expected 6 million in revenue. They only did 3 million. So they really missed on this quarter's expectations. Yeah, that's why they gapped down right there. But next quarter, analysts are expecting 24 million of revenue. That's actually huge. That'll be a super new record revenue. So it's literally going to go from 3 million to 24 million. That's 100 million of annual revenue, which is kind of like 6 times sales. But they're still expected to lose net income. And you definitely don't want to see them miss on these projections. So honestly, at the end of the day, maybe hold this one for the next 6 months as a super, super, super small position to see if they can actually hit this 24 mil of revenue. But keep the size super, super low there. I hate the super small market caps that lose so much of their market cap and net income every quarter. So ASX, let's check this one out real quickly. ASE Technology. Hey, this is one you posted about in the Discord, I think, Looney, and I wanted to reply to you, but I've been at college all day. So this is a Taiwan company. Let's see if there's any news here. Strong year-over-year growth rate. That's great. So this stock is literally at an all-time high right now. So if you've ever bought this stock in the past, you're definitely up on your position. So we're going to convert first off the currency from Taiwan to USD just to get a better idea here, and check that out. This implies to me that this stock is just going to continue to climb higher. The forward PE is a 24. Let me take a sip of my coconut water here. And a 24 forward PE, I mean, I feel like that could really stretch up to like a 28, 29 forward PE before it really maxes out. So they're really not that expensive. And even though they're based in Taiwan, most of the revenue actually comes from the US. Taiwan is 14% of the revenue. So that's just where they're headquartered. Let's see how they're doing. So the revenue's up 9.7% year over year. And the net income's up 15. So yeah, they're really making 300 to 400 million of after-tax net income. Record net income this quarter, I think. So yeah, actually, especially on an operating profit, they did 430 mil. They netted 370 mil. Did they pay a dividend? A 1.87% dividend. That payout ratio is a 71%. It says. Let's go do our own math. So they're doing 300 mil now a quarter, probably more. So they're doing 300 mil in net income a quarter. The dividend cost. Oh, so they pay by quarterly. Okay, so the dividend cost of 300 mil a quarter. Oh, so maybe they do have around a 70% payout ratio. I don't know. The EPS expectations are record net income next quarter as well. They had a massive beat this quarter on earnings. So it's an interesting one. Taiwan company, they're a packaging, electronic manufacturing service, and testing company. Testing revenue, that's up 35% after 12. So interesting company here. Cheap forward PE, I like that. So let me get to Meta real quickly. I saw that one and I'm like, we got to get to Meta because I love this company. I am a shareholder of Meta. I like what they're doing with the Meta Ray Bans. I love their advertising behemoth of Instagram, Facebook, Threads is doing great, Reels, and WhatsApp as well. So I do own this one. It's on bias, but I'm only up 22%. Actually, a very attractive stock to buy at their current price. Like, if this was any other company besides the name Meta, I'd be buying this one because the forward PE on Meta is a 21.9. Like, look at the very middle here, 21 forward PE. That's very fair in my opinion. Uh-oh. Oh, my kilobytes just tanked. So if it lags for a second, that's my apologies. That's not your fault. My internet's always just having issues. Great. But anywho, check this out. For Meta, yeah, literally on the right there, a 21 forward PE on Meta. And if we go to their active users, this is a really cool metric we get. They literally have 3.54 billion daily active users. So pretty much half the world is on a Meta app once a day. That's incredible. Now, this quarter, they did have a one-time adjustment to their net income. If we go down here, it says the net income this quarter was only 2.7 billion. So, the net income was 2.7 billion, but it actually was a record. If we look at the operating profit, they actually kept 20 billion. So, hold on. Okay, it's fully back. The stream it crashed, but it's fully back now, according to the data. Okay. Okay. My bad there. Okay, it's fully back now. Okay, so anyway, yeah, Meta says they only made 2.7 billion. That was a one-time adjustment from the beautiful bill thing. They actually made a record Q3 profits of 20 billion, and they had a $50 billion revenue quarter. So this was an incredible quarter for Meta. And if we go down here, one thing being questioned though from analysts are how much they're spending on AI. Buying these NVIDIA chips to train their own LLM, but Google OpenAI is already winning. But yeah, the cash from investing activities are spending 20 to 25 billion a quarter. That's more than the net income they make every quarter. And Meta, for the first time ever, has a net debt position. But I actually like that they're spending on AI. I don't mind it. I actually think it's going to have real returns. They said they're going to lower their investment in the metaverse. Here's the metaverse revenue. It has not done good. It's actually lower than it was in 2021. So I'm glad they're not investing much in the metaverse. But I like the Meta Ray-Bans, new concept. And someone said, "What's a fair price to buy Meta?" Right now's price, if I'm being honest with you, because it's to start your position. If I never owned Meta, I'd start the position in Meta today as a small one. Don't full size position it, but a 22 forward PE is super cheap. Meta's certainly at a discount right now. Cheapest Mag 7. Second cheapest is Microsoft. Actually, I really like Microsoft. So let's get to SUU in Planet Lab news today. Hey, let me get to Planet Labs. I know Google is the largest shareholder over there. Oh, Red Cat, that's a nice drone play. What price is good to buy, Matt? Yeah, I think um, GDRX. We got to get to GDRX too. So here's Solar Bank. Actually, this is a very small micro cap. You do want to be careful. The whole entire company is worth 59 million. So that's just really tiny market cap. It's hard to really trust these kind of names. They're only worth 50 million. And check this out. So look at this. Last quarter, they literally lost 22 million. And when the whole company is worth 59 million, that's devastating. And look what that did to their assets. Craig, that whenever you lose 20 million net income, that money has to come from somewhere. So look, their assets tanked these past 2 quarters because they lost so much net income. Yeah. Oh, it's a Canadian company too. So here's it in USD. They actually lost, okay, 60 mil. Anyway, I'd be careful with that one because it's just hard to trust these. They're at an all-time low because they just can't get profitable. The sales expectations aren't good. The revenue is supposed to fall to 9 million. So I don't know. I just be real careful with that one. Probably a swing trade stock, not really a buy and never sell. Yo, MC, ADPT. Remind me to get to that one. I do have a bit of a backlog. I gotta get to a few stocks first. Let me get to GDRX and Planet Lab next. I cannot type it in Wait, is that what it was? Yeah, GDR. X. Okay, we found a good RX. Is it like a Medicare Medicaid stock? So yeah, another really small one. They're only worth 900 million. So $900 million company. Let's see what they do. Consumer-focused digital healthcare platform, free access to lower prices and generic medications. So cool, some sort of a healthcare name. And what's their revenue? So they do 200 million in revenue a quarter. The growth has slowed down. Like year over year, the revenue only grew 0.4%. That doesn't really beat inflation, only 0.4% revenue growth. And the net income, so the profits fell 28%. So it was a margin compression this quarter. Wow, their gross margins are good, but yeah, the net margin fell. So maybe this was a one-time adjustment, though. I don't know. They're buying a little bit. It's an interesting name here because they're still profitable. They're still making net income every quarter, so it's not like they're going bankrupt. But the revenue is supposed to go more negative, so it's going to go from 202 million to 194 million. So that'll be another 5% decline. Yeah, the EPS. So basically, that's probably why the company is really cheap, because the net income is supposed to go down, the revenue is supposed to go down, but it's not really that. It's not the end of the world because they're at a 16 forward PE. I'd just be careful with that one. Again, a small market cap, so keep the allocation of that one low. All right. So what was Planet Labs ticker symbol? Let me just type it in. Planet. Maybe it's just PL. Okay, yeah, PL right here. So this is a pretty interesting one. They're like an aerospace company. They're up 10% on the day. Let's see what this news says. Planet Labs are trading higher after the company announced multi-year nine-figure agreement with the Swedish Armed Forces. That's pretty insane. If we go to the shareholders right here, check out the largest shareholders. So the number one kind of person to benefit, company to benefit is actually Alphabet, aka Google. So they own 10% of the entire company. So 10, that's great. So, well, it's not that much for Google. It's worth 7.8 billion, but the investment, Google bought that stake way down here, so they're just up and to the right on their original cost basis. Look at the revenue growth. The revenue is 81 million, up from 60 million. Let me go to their website just to get a slight bit better idea of what they do. I believe it's like a satellite imaging company. So, oh yeah, here we go. Planets, next generation Earth intelligence satellite, um, defense intelligence. Planet launches 2 additional Pelican satellites. So anyway, some kind of looks closer. Oh yeah, so maybe it's some sort of like they help out Google Maps, Apple Maps. They probably have a contract with Google Maps. So anyway, Planet Lab's a cool one. It's probably tough to buy in right now at all-time highs, but certainly an interesting one. Hey, what up, CES? What do you think about Duolingo? Hey, we literally just looked at Duolingo. We did a full analysis on them. If you want, you can rewind the stream. It's like probably 10 minutes ago. The stream's only 20 minutes far, so it shouldn't be too hard to find. But we just did a deep dive on Duolingo. But if you come back in like 20 minutes, we'll check it out again. C3AI, what's the ticker symbol for that one? Is CRMD a good price to buy right now? So I actually bought a share of that company. There are 2 shares of this stock today. And the thing is, you cannot let this company be over 1 or 2% of your total portfolio. You got to keep this as a super small position in your portfolio, but they're one of the most interesting small caps right now. I'm down 35% on them. They have 65 employees. They're only worth 550 million, so I don't normally like these kind of companies, but they do make a lot of net income. But the reason they just fell right here is because they lost their like government subsidy. So the forecasts for 2027 are really down bad. But I just bought 2 shares of this company earlier today. I'm not selling out of them. I think they should have a bit of a recovery, but I'm not too happy with them. You got super smallly nibble. Don't ever keep that one as more than like 1 or 2% of your portfolio. But I do love that one. But yeah, what's up, WEEB? What is this one? Which stock is suggested to buy today? Huh, that's interesting. Here's some of my favorite ones that are seem pretty cheap. Microsoft is actually a really good valuation. If you don't already own it, this is a great one to individually own. And no financial advisor will call you crazy for buying the behemoth Microsoft at only a 28 forward PE. It's super fair, in my opinion. You could just add quality to your portfolio. If you don't own the S&P 500, own the 3rd largest company in the S&P 500 by buying Microsoft, and you should keep up. Southern Company's a nice little utility. If you like a higher yielding one, you get a 3.43% dividend yield here. I do own that one, so I might be biased. What's up on the day? Dave is down bad on the day, so we're actually are green. We're up 0.86% right now. Here's our total performance. Definitely don't listen to me. I'm not an expert. By the way, I don't sell anything. I have no course book. Oh, remember to get to Intuit. I like that one. That one's great. Yeah, we're up 20% all time. And we have our Robinhood portfolio as well. Google's green on the day after Apple announced an agreement to like put in Google Gemini integrated with Siri or whatever. So Google's pretty much at an all-time high right now. We were starting the day really red. We were down 0.65. Now we're up 0.03. Meta right now, yeah, we just looked at Meta. I love Meta. American Express. Let me look at American Express. Then remind me. Lockheed Martin. What's up, Sermon and MC? Did you see Amphenol purchased a company? Absolutely. It was a great deal. It's already accretive to the EPS, and I think it's going to be even more accretive to the EPS. Yeah, Amphenol's at a crazy new all-time high. That's why this portfolio is doing so good on the day. We're actually at a new all-time high in this portfolio because of Amphenol. This looks crazy, but we're already up 9% year to date. So we're having a great year to date. Let me get to, actually, I forgot what I was going to get to. Let me just get to Intuit right here. Oh yeah, and then American Express. I freaking love that one too. So here's Intuit. The stock has been flat for about a year, and it's because it's still a little expensive, but this is a quality software name that I think is definitely worth. They're just as quality as like a Microsoft. Even now, the forward PE is a 39, so that is a little expensive, but the current PE is a 44, so there's still a lot of EPS growth. They're the tax company. I believe they own TurboTax, so this is their consumer tax revenue. Obviously, they make their bulk of money tax season in that one quarter every year. So, but that great quarter grew 10% year over year. If we just kind of blend out, oh yeah, if we go to their global business solutions, this is their other super growthy software business. It hits a new record every year, every quarter. It's up 17% year over year, after 9, after 18, after 42. It just continues the streak of growth. So if we head down here to their revenue, it's up 18% year over year this quarter. This quarter's up 20%, 15, 17. So double digit top line growth. We can kind of look at the annual revenue trend here. It's just up and to the right. And not just the revenue, not just their top line looks great, but also their bottom line, their after-tax net income. Check this out right here. This quarter, they made 450 mil in net income, up triple digits, quadruple digits. And this is real. They've really fixed their other quarters because like on the operating profit, like this was up 90% year over year. That was the most impressive part because usually they just make most of their net income that one quarter, kind of lose money these other quarters. But now they've evened it out where all the quarters are just really profitable. So Intuit is a phenomenal buy, never sell stock. It's honestly attractive to start nibbling on your position today because they always trade expensive. It's TurboTax. It's such quality. They have a monopoly, basically. Um, I love that name. What did I want to get to? Oh yeah, American Express. You know who owns American Express? This is kind of a cool one. The homie Warren Buffett. It's actually been one of his best performers. Check this out right here. In Warren Buffett's portfolio, his largest holding is Apple, but a lot of people don't know this. American Express is about to pass that. 18% of his portfolio is in American Express. They are down 4% of the day. Oh yeah, because what they're trying to do is they're trying to the administration's trying to limit 10% interest rate cap. Okay, yeah, check this out right here. So this is probably affecting MasterCard, American Express. So don't want to get into politics, but here it says Trump proposes a 10% cap on credit card interest rates. So I guess that's great for the consumer. I guess not good for these stocks right here. But anyway, American Express is cheap. They deserve to be at all-time highs too. They've been one of the best performers, and they give you good dividend. Even if you buy the stock right now, you get a 0.7% dividend. The yearly dividend growth is phenomenal. But this forward PE implies to me that American Express is really cheap at a 22 forward PE. So yeah, United States Consumer Services, international card services. The international card is up 14 after 11. That's good growth. Global Merchant Network Solutions, how's that doing? That's up 6% year over year. So anyway, if we kind of look at this company's bottom line, their net income, they're printing money, easily 2.5 to 3 billion of real after-tax net income every quarter. So if we go to the cash from I don't know what I'm clicking here. If we go to the cash flow statement, we can see how much their dividend cost. The dividend only cost 586 million. And they're making $2 billion a quarter, so they can easily afford the dividend. Since the dividend costs so little, the best part is the massive buybacks. They're doing 1 to 2 billion of buybacks a quarter. So if we go to the net income year over year, the net income grew by 15, but the net income per share is up by 18.6 because the share part of the ratio went down. They bought back their own shares, makes the EPS go higher. What's the forward PE? The forward PE is basically just the next year's net income. So like the PE stands for basically price to net income plus any share buybacks or dilution, but just call it price to net income. So basically, they're currently trading at 24 times net income. They're trading at 22 times next year's net income. Again, the EPS, it's sometimes higher or lower if they do buybacks or if they dilute you. So it's not always an exact price to net income. It adds in the whatever the dilution or buybacks are. All right, let's look at some more here. What's going on with big money? Hey, Mike Murphy, good to see you, man. I hope you're having a great day. Toasty said VLN. What's that one? Is that Valen or I don't know this name. Let's check it out. Thoughts on ORIO? Hey, yeah, we'll check. I'm missing so many stocks here. I do apologize if I'm missing some of these names here. Like, I did want to get to Constellation Software. So this is a small one. Yeah, be very careful with this market cap here in the top right. You can see they're only worth $230 million. So that's a very small market cap. Let's see if they make money. So this is the bad news. When you're only worth 200 million and you lose over 20 million a year, that's 10% of the entire market cap you're losing in net income a year. And yeah, check this out. Whenever you lose net income, that money has to come from somewhere. So if we go to their balance sheet, notice as they lose net income every quarter, their assets are just slowly going down. Luckily, it looks like they still have a bit of more cash on hand so they can afford to lose these net incomes, but it's a risky one. They had a great beat on earnings. They expected 15 mil. They did 17. So yeah, they're still expected to lose around, 8 million a quarter of EPS for the next. So but there is revenue growth. I just be real careful here. I would not certainly trust anything meaningful in this name. It could be a fun little swing trade or something, but they just lose too much net income to really trust, I think. Let me know if you kind of that's a pure financial analysis. That's obviously doing no technicals. I don't know if you're trying to swing trade that or day trade it. Who knows? ADPT, yeah, let's do this one. I meant to get to that one too. What's up, MC? I hope you're having a great day. So, this company does not have a forward PE, so they're not profitable yet. But check out the stock price appreciation. It went from $4 to $18. Let's see if we can figure out what caused that. So, earnings always explain the stock, and this makes perfect sense. Check out the past 3 quarters. For the past 3 quarters, yeah, gapped up on earnings exactly on earnings day, gapped up exactly on earnings day right here massively because they beat so massively on expectations. Analysts this quarter expected 64 million, and they did 93. An insane beat on revenue. They were expected to lose net income. They made EPS. They made net income and EBIT. So this wasn't like some one-time adjustment. Like they really were net income positive this quarter. That was a big beat on expectations. So revenue grew 100% year over year, and they actually made a profit of $9 million. So the future sentiment is really in their favor. So actually, there's probably just no analyst covering this one. If they went this crazy net income positive and this crazy of a revenue beat, that forward PE is using these negative EPS growth rates. Maybe they actually now have a positive forward PE. Interesting here. So they're in minimal residual disease. Yeah, look at these year-over-year comps. It's up 52 after 52 after 23% growth. Incredible. That's why the stock is going up, because this business is booming. I'm assuming this one, or hey, that one had a pop up in revenue. I don't know. Did they buy a company or? No, they didn't. Anyway, ADPT is actually pretty cool. Yeah, hey, trying not to spam here. Is Oracle worth buying? I'd be careful. Today's up 15%. I'm almost up 120% on that one. Dude, that's crazy. That is crazy right there. So, what is this one? Orion Digital. Yeah, we're not going to cover this one. If you look in the top right, they're only worth $28 million, and they're at an all-time low. We just don't like to really cover these micro caps, losing money every quarter kind of for eternity. It says they're making net income, but they didn't actually make net income. They actually lost money. Did they sell an asset? Yeah, they're selling off their assets. So the revenue's down 5%. I just would not touch this one. If you got another stock you want me to look at, let me know. But yeah, they're only worth legit 28 mil. Just be so careful there. I was down earlier. Now I'm up 0.4%. Yo, me too, Brian. That's the crazy thing. And the market just had a crazy recovery. I was down 0.65%. Now we're green, slightly green, 0.03%. Mainly led by Google's doing great. United Rentals is doing great too. And the interest rate sensitives like Carlisle. How's Cavco doing? How's our Roth IRA doing? We're still not green on our Roth IRA yet. Data's down 5 and Core Medics, but okay. What's this one here? FFB. FFB. I haven't heard of this one either. Let me know which one you're talking about here. There's like weird ticker symbols. There's FFBB. This is a Malaysian company called FFB. I can't find FFB. I did check that one out, user 53. Let me know which one you're talking about there. Is ASTS a buy? Still too high to buy? ASTS is still too high of a price to buy. 35 bill market cap. The risk reward is not great at this price, but I can see why this stock has had so much great momentum because the expectations are so good. Check this out. The revenue this quarter was a record, 14 million for the first time ever. Record quarter. So this quarter was 14 million, crazy record. Next quarter, they're expecting 39 million. It's just literally up from 700K to 35 mil. It's going to just hit crazy growth rates. So that's why this one I think is pricing on that growth. It's nothing new to the analyst. I think it is really overvalued. A 35 bill market cap, and they're expected to just continue to lose a lot of money. Like this makes Dave and Powell Industries and Amphenol look like a steal. But yeah, it is definitely too high to buy, but they are interesting to maybe have as a super, super small position. How do you think Klarna will do this year? Isn't that the buy now, pay later company? So Klarna, they just IPO'd. They do have a forward PE. That's great news because I know they had their little IPO one-time adjustment. It says they lost money. Well, maybe they are really losing money. So I guess they're not profitable yet. But again, they just IPO'd, so we don't get too much data here. The revenue's up 21% year over year, which is good. Yeah, I like the buy now, pay later stocks. One that has kind of a more history is a firm, and they are booming right now. I don't love the buy now, pay later stocks if we go into like a real recession because they, they just won't pay back these loans. But a firm is doing phenomenally. They're actually net income positive. So actually, that's maybe an alternative one you could put on your watch list if you're always going to buy. Yeah, a firm's down 5% of the day. Yeah, there's the news around the credit card 10% limit or whatever. Maybe that'll make buy now, pay later stocks go up. But anyway, a firm's actually one that's net income positive and it has the same nice growth, 33% after 41. So I wish I'd give you more thoughts on Klarna, but they just IPO'd. They're like a smaller firm. Um, is Malaysian FFB going okay this year? Okay, let's check this one out. So yeah, this is a Malaysian company. Wow, they're at all-time high. So congrats if you own this company. They're not worth much, but let's actually convert the currency from the Malaysian currency to US dollars just to get a better idea here. So okay, they report weird. Um, okay, revenue's up 16% year over year after 43%. So that's actually phenomenal growth. That's probably why the stock is done so good. Is there any kind of weekly news around here? Nah. But revenue of 70 million this quarter, and they are actually net income positive. That's phenomenal news. And then net income's up 37 when the revenue's up 15. So that actually means they're growing margins. Net margins grew 18% year over year. They're expanding margins. This is great news. So it's the financials that explain why this stock is at an all-time high. So they actually have, I like that they're already net income positive, safe, good balance sheet. Who is the largest shareholder here? Rainforest Capital South. But anyway, yeah, it's an interesting Malaysian company. Where does the revenue come from? Let's see. I'm guessing. So yeah, 82% of the revenue is from Malaysia. Then Australia is 13%, but they have great numbers, great growth. So they beat on expectations. They expected 65, they did 70, and the revenue is going to go from 55 to 69. So there's still a lot of growth expected. Interesting one there, just from a financial point of view. Hopefully that was helpful there, user. Oh, yeah. Hey, no problem there. What do you think about food stocks like General Mills? Yo, General Mills and Mondelez are doing great. And applesauce, how's it going? Can you take a a look at BTE and see if it's a good long-term price? Let's do this one real quickly. And I know I'm behind. I apologize. I want to get to like Constellation Software and Fortinet. Yo, Fortinet's phenomenal. That's a great one too. Trade Desk. What's up, George? So here's Baytex Energy. They've had a great year. So they gapped up massively that day, and it wasn't earnings day. So I don't know what that news was, but maybe they got some sort of great contract. I don't know, but it's like an energy company, Baytex Energy. Let's go see what they actually do. Please, if the Wi-Fi doesn't. There we go. So the revenue expectations are bad. Actually, this is something to be looked into. The revenue was 870 mil. It's supposed to fall to 320 million. They beat on expectations this quarter, so that's just weird though. I wonder why the revenue is going to go from 900 mil to 300 mil. I don't know exactly. So maybe they're a commodity stock. Yeah, revenue's already down 13% year over year, but they're still, if you average it out, they're still net income positive on average. Let me check out their website. Yeah, oil and gas company, Canadian oil and gas stock, creating energy. Oh, they have an investor presentation. Should we look at the investor presentation? Yeah, I'd just be careful with this one. I love energy names. I love CEG, Constellation Energy. Um, yeah, like look at this stock, same price that it was in 2015. So it's an oil commodity, Canadian oil and gas stock. They've done great this past year. There might just be a safer play out there if you wanted to get exposure to this commodity. I don't know. They have a good yield, or a 2% yield. They had to look at the dividend history there. They were printing money back there. Anyway, interesting one there. There's so many stocks I want to get to. I'm behind on. Let me get to this one because I like the cybersecurity industry. If you want exposure to cybersecurity, and I think cybersecurity is like immune to the whole AI craze because hackers will just utilize AI and only get better at it. So Fortinet is a great cybersecurity play that's on a discount right now, and they have good fundamentals. Like here, this is a cybersecurity subscription model company. And if we go to where most of the revenue come from, it's their subscription business. So very predictable. And this is what you want to see. And this is why I trust this one. The subscription revenue is growing very nicely. It's up 12% after 20% growth, after 33% growth, after 28. Like if we go to on an annual basis, it just hits a new record every year, every quarter. And they're already super net income positive. And this was a one-time adjustment they had, so they didn't actually the net income isn't actually down 12%, it's actually up 16%, but they had that adjustment. It doesn't matter, but we can see that they're easily making 4 to 500 million of net income a quarter. So they're already profitable. Subscription models going like crazy. Here's the FCF, which is free cash flow. The free cash flow is even better. It's like 500 mil plus a net income a quarter. So expectations are up and to the right. EPS, they always beat by a good chunk on EPS. So this forward PE, this forward PE might actually be cheaper than a 31. It might actually be like a 28 forward PE. So this is a phenomenal cybersecurity name. I'm actually going to put them back to the top of my watch list because they're just so good. Um, I really like that net income. CrowdStrike isn't net income positive yet. Palo Alto Networks is. I really like Palo Alto Networks. That's a good one. The Trade Desk. Let me do this one. This is your CTV advertising play. So it's a TV advertising company, and the kind of let's see, is there any kind of weekly news around this company? The kind of bad news is, even though they're on this massive dip, they're not super cheap yet in terms of valuation. They I'm afraid this one might fall another 10 to 15% before it fully bottoms out. So yeah, if we go to the forward PE, well, actually, this is good. Actually, I didn't know it was this cheap. 35 forward PE. I mean, it's still more expensive than Amazon and Google and a lot of these names, but what I like is they do make great net income every quarter. Easily, like if we round it out, they're probably going to be making around 100 million of after-tax net income every quarter from now on. The revenue's up 17. Let's see the net margins here. So yeah, they have a 15 to 20% net margin, which is really good. What about the free cash flow here? Free cash flow is great as well. It's just like there's another thing like Netflix actually used to use Trade Desk to find advertisers for their new ad tier subscription that they added. But then actually Netflix ended the partnership with Trade Desk and went over to Amazon. So I was also reading more kind of Morningstar research around this. Here's what the Bulls are saying and the Bears are saying over here. Like most advertising dollars are routed toward the ad giants. Firms like Google, Meta have no incentive to work with Trade Desk. That's not what I wanted to read. Yeah, Amazon directly released this, and the stock tanked on this day. Amazon's demand-side platform directly targets TTD's advertising space on the open internet, and its scale allows it to outcompete on price. So, yeah, you don't really want Amazon as your competition. Amazon is like a mini TTD in one, but it's starting to get really cheap, especially on like an RSI. It's really oversold. A 35 forward PE, honestly, around a 31 forward PE, like maybe another 8% drop. That's where like you really start to buy because they're still a great business. I love the advertising business. But I think it's just that maybe future sentiment. I don't know. So yeah. Hey, what up, Mata? Good to see you. What is this one? BESI. BESI. Also, car Carcass up another 1%. Hey, what's the ticker symbol for that one? Hey, I typed in BESI, Mr. Powell. Is it this company right here, BE Semiconductor, BESIY? Is that the ticker symbol? I could not find that one. Um, I bought some ROK and some Honeywell earlier. Very nice. Let's actually check out ROK. What's that? Rockwell Automation. Oh, wow. They're at an all-time high right now. And then Constellation Software. I keep forgetting and I apologize. But yeah, Rockwell Automation, they're at a 37 forward PE. They're at an all-time high. So honestly, they could potentially go higher because the current PE is a 53, which is expensive. But when we look at it on forward PE, it dramatically goes down. So the price to earnings growth ratio is really good here. So they sell intelligent devices, software and control, and life cycle services. So they beat really good on revenue. They expected 2.2. They did 2.31. They did miss on EPS. I wonder if that was a one-time adjustment, though. I don't know. Yeah, so look at that. It says that net income was only 30 million this quarter. If we go to the operating profit, though, yeah, look at that. If you looked at the EPS, you'd say, whoa, EPS down 41%. What's going on here? It's not actually. The core business, the profits are actually up by 60% year over year. So revenue's up 13 and profits are up by 60. So yeah, actually the margins are going up on this company, technically. So interesting name here. Actually, I'm going to check out their website right here because I don't know much about this company. Rockwell Automation. Well, here's their website. Global leader in transformation and industrial automation. So, huh. If we can see some other pictures here, maybe like an assembly process line, kind of like this right here. Um, what did that say? Greenfield plant ramps up cheese production. Or anyway, Rockwell Automation, interesting one there. The industry chain is robotics. Should I say it's a robotics company? Specialty industrial machinery is what they do. High margin projects like that because they had a crazy net margin. They had like a 40-50% net margin. Um, so Constellation Software, I think that's CSU. So Constellation Software, this company is a Canadian stock. So we'll look at the currency in USD, but they are a serial acquirer. Like they are acquiring like I think they've acquired over like 200 businesses since like their inception. But they just acquire a bunch of businesses. They have a lot of great software. We look at their annual revenue, like check this out. It's just up and to the right, 10 billion for the full year 2024, 3 billion just this quarter. So it's going to be like 12 billion the next year. And they're net income positive. They're already making a couple hundred million of net income a quarter. Yeah, and there is little one-time adjustments from other acquisitions. So the actual core operating profit is at a record. Everything looks great here. So what's the forward PE of 45? So that might still be a little expensive. That might be the bad news is that even after this dip, they're still expensive, but current PE is 73. The forward PE is all the way down to a 44. So that's like literally a double of EPS nearly. So uh yeah, great cash flow as well. So yeah, the free cash flow is really good. The net income's great. It's at a record, literally record profitability this quarter and the last quarter. So yeah, I I really like this one. I really do. US is 44% of the revenue. This might be slightly bit expensive. Just had to drop a follow. Thank you for live. Hey, Column, thanks so much. Yeah, if you guys want to support me, I sell nothing. I have no course, book, WhatsApp. I don't coach. I don't coach. I literally do nothing. The only thing I do have, though, if you want to support me, is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert, and you'll find it. I'm also streaming on there, so if you miss anything and wanted to rewind it, you could definitely do that. Evening all, you checked out Rocket Lab. I've not looked at Rocket Lab. Let me get to that one. And hey, Clem, what was BESI, the BESIY company? Was that the stock you wanted me to look at? Um, CAS says, what's your thoughts on BYRN? BYRN. This one's on my watch list, actually. I do believe I like this stock. I don't remember it. Okay, so yeah, look at this. They're only worth $400 million. But here's the thing. If I was going to buy any company worth $400 million, I'd want to buy one that's already profitable. This is pretty crazy. They're literally making a couple million of net income every single quarter. So they're already profitable. Like, I don't want to buy a $300 million company that's already losing money. And the revenue growth is there. Like, revenue's up 35%. They did 28 mil of revenue and netted 2.5 mil and all that. And another cherry on top is a fortress balance sheet. Basically no debt at all and no net debt. They have a huge net cash position. So um, everything looks good here. Yeah, revenue is supposed to hit 35 million next quarter. It's never been even close to that before. Yeah. So honestly, that's an attractive one. I'd keep the allocation of that one still really low. You don't want to have these as meaningful size positions. Like they're only worth 400 mil. But I have a lot of companies like that where they're small caps, but they're interesting to still look into and buy it as a little size position. And I have a lot of those kind of positions in here where I really like PSIX and I really like Clear Secure and some of these names, but I keep them as very, very small positions like Cormetics because you just can't trust them with a meaningful amount of your portfolio. Can you analyze my employer GPI? Is that I don't I can't do that, man. Or if you got any certain stocks, are you talking about ticker symbol GPI right here? Um, wish I could help you out there, but I don't really know what that means. Rocket Lab. Let's do Rocket Lab real quick. This is a great space company. This is the most quality space stock. If I was ever going to pick a space stock between like ASTS, Space Mobile, Lunar, or Rocket Lab, I would pick Rocket Lab. But the thing is, it's super Palantir type expensive. Wow, they're a $50 billion company. They're worth a lot more than Comfort Systems. I remember this down here was like 20 bill, but it's all the way at 50 billion now. Anyway, that's an insane market cap, but this is one I like because they're really growthy. Check out the revenue. Let me actually do it up here. Their space systems revenue hit a record, over 100 million for the first time ever. It's up 36% after it grew 81% after 16. Like incredible growth. That's why I love this one. And not just the space systems revenue, but also the launch services is up 100% year over year. Also, record for the quarter, and the expectations are up and to the right as well. Like the revenue is going to go from 122 mil on the left to 180 million. So there's a great year-over-year comp that's happening. Bad news is they're still losing a lot of net income every quarter, around 50 mil a quarter, but it kind of doesn't matter as long as they keep up this insane top line growth. And they also just completed their Geost acquisition. They bought them for 200 mil, and they just acquired another company. They have a lot of contracts with NASA and JAXA. So pretty cool. What is this app? Hey, what up, FN Trade? This is actually, or if you want to get this app, it's a brokerage. It's in the link tree in my bio, very first link there. My favorite app to buy stocks on. Yeah, a broker called Moomoo. Should I buy RIG stock? Is this an oil and gas company, I believe, or Did they change their ticker symbol? Anyway, yeah, I don't love this one. It's lower than it was in 1999. So you bought the stock in 1999, you're down on your position. But yeah, it looks just like it's following the commodity of oil, the oil and gas drillers. Yeah, contract drilling service. So dang. It says they lost 2 bill in net income this quarter. Like, look at that. Look what that did to their assets. But it wasn't really real. They didn't really lose that net income, the core business, but they had like this adjustment maybe from project needing money. I don't know. Um, but yeah, it looks like they are making net income every quarter. That's kind of the real reality. They are making net income every quarter. So they probably have a forward PE. Let's see here. Forward PE of a 25. Okay, so yeah, they're obviously not making net income now, but the forward PE is a 25. So that starts to make it look a little better, but it's not cheap. And they've been one of the worser performing oil and gas stocks I've like seen out there, like massively underperform Exxon and Chevron and EOG, like in Shell. Like this is I don't love this one, and they don't pay a dividend. I'd just be careful with that one. Um, just for that right there. DOCN, yeah. Hey, I wanted to get to DOCN right here. Oh my man, what happened to CRMD? Yeah, we had a whole segment on CRMD earlier. They lost their government like subsidy approval, so they fell 30%. I did buy a little bit more shares of them, but you got to keep that company a very low position. So let's check this out right here. Here's Trends or DigitalOcean. We just look at TransOcean. Here's DigitalOcean. This is a cybersecurity play. I've actually made a video about this one like a long, long time ago. I wonder if I could find it. Back here, probably not, but anyway, this is a great one because they're one of the smaller cybersecurity names, and cybersecurity is just an industry I love. They have a lot of customers that pay over like $100,000 a year. Check out the expectations, like they're growthy. Revenue is going to go from 210 to 250 million, and they're net income positive every quarter. They're always making net income. They had a slight one-time adjustment this quarter. They didn't actually make 158 million, but they did make a record 45 mil, up 83% year over year. So incredible net income right here. Revenues at a record. And wait, are they doing any acquisitions? Yeah, well, the best part is actually the share buybacks on this company. They spend all their net income buying back their own shares instead of paying off debt, because the debt can easily be paid off. Like, especially in 2023, they were doing like 100 mil a quarter of buybacks, and now they're still doing it. So this is a very shareholder friendly company, you know. So anyway, profits are headed in the right direction. They're probably expensive. What's the forward PE here? So yeah, 48 forward PE. So it's not cheap at this current price. Like, I wouldn't allocate any new money to this one, but they're a great quality name. And if you go to my YouTube channel, I have a video a long time ago where I go in depth in this company. Like, we look at their investor presentation, we see how many customers exactly pay 100K a year. So it's pretty cool. Build a Slack AI chatbot. So anyway, they're a really great cybersecurity play. All right. Is Futu only up the past year because of the crypto rally? Futu is doing great because of the great fundamentals. Grab some more PSIX at 66 last week. Yo, that's nice. I do like PSIX. I bought Rocket Lab back in 2023, which was $4.50. Heck yeah, dang, you got a steal of a deal on that one. Hey, Brian Paul, good to see you. Shout out the member. We'll get to ADEV right here. Are you on X? I am not. I don't. The only other platform I'm on is YouTube. This is my only TikTok account, and I only have a YouTube channel called Nathan Roberts. So yeah, please watch out for people impersonating me. I'll never follow you, DM you. I don't sell literally anything. So yeah, hey Baba, yeah, if you got a stock you want me to look at, let me know there. What's up? Ooh, oh, I see some good names here. Grab, let me do Grab right here because I always like to cover this one. So this is, and then and GPI. I freaking forgot about GPI. I'm so sorry. We got to get to GPI. that company. I'm so behind. I apologize if I miss stocks, but we're gonna be live for another hour. Dang, I have to go in exactly an hour because I have to go to college with classes. Okay, anyway, I got an English class, but anyway, Grab is a really cool company. This is international Uber. They do exactly what Uber does, literally exactly what Uber does, but internationally. Check out where they get the revenue from. 30% of it's Malaysia, Indonesia's 23, Singapore's 20, Philippines. So international Uber, and that's what I love about Uber buying this company. It makes me bullish on Uber stock as well. I think Grab and Uber are pretty decent. Uber is the safer, better buy in my opinion. But Grab is still one, like, you buy Uber and then maybe buy a little bit of Grab, like a little bit of it. Grab a little bit of Grab. But yeah, Uber is a genius. Uber owns 13% of the entire company, gives Uber instant international diversification. And also Toyota Motor owns 5.5% of the company. And this is a great company for just you to get international diversification because we know the commodity of ride sharing is universally needed around the world, especially in these other countries where the local people, where you don't have an app, they try to scam you and stuff. So they're actually really popular. I see this on like YouTube videos and stuff. They're always like, yo, they always say grab a grab, is what they say in other countries. But the expectations are up and to the right. They're finally net income positive. They're now making 10 to 20 mil in net income a quarter. If we zoom out to just the previous year, they were losing, 100 mil in net income a quarter. So they're finally making net income every quarter, the most profitable they've ever been. EPS expectations are you're supposed to double to 1 cent to 2 cent again. They keep the stock split, so it's only a $4, $8 stock, but the net income is good. Anywho, great international diversification by Uber, and I like Grab. It looks like this: Grab and a GAC to deploy 20,000 EVs across Southeast Asia. So interesting there. It's not a cybersecurity company, it's cloud infrastructure. What stock were we talking about there, MC? DigitalOcean. No, DigitalOcean does do some cybersecurity. But or yeah, maybe cloud security. Anyway, yeah, that I'd believe it if it was cloud. Okay, what's this one? Oh, what was Fufu? I wanted to get to Fufu too. Wait, GPI. Let me do this one right here. Group One Automotive. Then we'll do ADYEN. And so here's Group One Automotive. They've done phenomenal. Look at that stock price appreciation since 2019. It's been a 4 or 5x. And they're super cheap at current valuation. So you're buying this company at 9 times net income or 9.5 times next year's net income. That implies to me that this stock is going higher potentially. And they massively beat on revenue. So analysts expected 5.67. They did 5.78. They had a little one-time adjustment to their EPS. They're normally making $9 to $10 of EPS, but they only did $1. So let's go look at that one-time adjustment. So let me get my coconut water real quick right here. But yeah, look at that. They're always making on average like 140 to 90 mil of after-tax net income a quarter, but this quarter was only 12 million. Here's how we can tell if this was a one-time adjustment or if it was really real. You go to the operating profit, and this was actually a normal quarter where they made 140 million. So there was some sort of little hiccup there. Doesn't really matter. Anyway, honestly, I can see why this company's cheap though. Like if we go to the net income, it's still kind of like way lower than it was in 2022. Like actually, let's pull up the annual net income right here. Yeah, so it's going to be still way lower than 2022, but there's growth and the growth is coming back. And they beat on revenue. They beat massively on revenue. EPS is still basically it's a company you're buying that's making $40 of EPS a year. It's a $400 stock, and then they probably have a high yield. Yeah, look at that. You get a 0.5% dividend yield, and they're only a 5% payout ratio for that 5% dividend yield. That reminds me of like a Coca-Cola Consolidated and like a MUSA, where like Coca-Cola Consolidated, they have a 0.67% dividend yield, but look at the payout ratio. It's only a 5.7. These are the kind of companies I love with super low dividend yields, but also super low payout ratios where they have the ability to massively increase it, like 4 or 5x it, but they just choose not to. What's the PE for Grab? They were expensive, I think at like a 60 forward PE, but you actually don't look at the forward PE because what I was talking about here, you see how if we zoom out, Grab was losing net income all last year. Now they just got net income for the first time ever. You really do a 2 or 3 year out forward PE, but yeah, the current forward PE is a 60, but that's a massive increase from right now at a 243 PE all the way down to 60. And then the next year, it's probably like a 28 or something. Who knows? Um, PO, yeah, my ADYEN. Let's check out this one, and then Poet, and oh, what do you think about Taiwan Semi? Hey, we'll check out Taiwan Semi. I have one stock, Nate, that I've been following for a while. VFF. Hey, what up, OLP? Hope you're having a great day. Thanks for those five goats there. We'll definitely check out VFF. What sectors are you bullish on? MEP work like um, like a comfort systems. I'm bullish on nuclear, like a CEG, constellation energy, utilities right now. So here is Aiden stock. It's an ADR, so they're worth $50 billion though. But let's convert the currency from euros to USD just to get a bit of a better idea here. Um, Revenue is supposed to hit 800 million next quarter. So okay, so we actually don't get their data because they're a European company, but this is the expectations that we do get right here. So the EPS is supposed to go from 14 cents to 23. So there is nice EPS growth, just basically EBIT supposed to go from 40 mil to 700 mil. Wow, so they have incredible margins. It's not going to show, but the revenue is going to be 800 mil and the earnings before interest on that will be 700 mil. So they have like 90% margins. Um, yeah, 37 forward PE. Let's see what this company does. Online payment. Oh, they partner with McDonald's, explore your business. So some sort of like maybe international payment software solutions company. Maybe like a Toast, kind of like that machine that asks you, "Hey, would you like to leave a 20, 40, or million% tip?" So cool. They're headquartered in, what was that, Amsterdam? Yeah. The Netherlands in Amsterdam. So cool. Interesting name there. And there's good growth. I wish I could look at more history there. Let me get to VFF real quickly. Let's get to VFF. So this is Village Farms International. Looks like a commodity stock, and they've been booming. So just since literally 6 months ago, went from 60 cents to $3.50. So they're still really tiny. So yeah, if we look at the market cap, they're still only worth 400 million. So that's a very small market cap. Oh, they're in the leaf industry. So I'll really quickly have to. I don't think I can show that word, but I will say, out of all the leaf stocks that exist, they're actually making good profits. They made 10 million of real after-tax net income this quarter. Really low leverage, which is phenomenal. Out of all the leaf plays, this is definitely one of the better ones that I've seen because they're actually making net income now finally. Because normally, Tilray burns net income, um, but yeah, they're actually making good profits. Actually, uh, what are the expectations here? So yeah, revenue. So the revenue is supposed to fall. It's supposed to go from 77 mil to 51 mil. So do beware of that. But it looks like they do beat on expectations usually. And they're supposed to stay EPS positive next quarter. They really are. So interesting one there. Said they were trading at like an 18 PE or something. What app is that? Yeah, hey, this app I'm on right here, if you want to get it, it's in the link tree in my bio, very first link there. It's actually a broker called Moomoo. But yeah, if you want to use my affiliate link, very first link in the link tree in my bio. What was other stock right here? Um, oh, I do like Bull stock. Should we get to Bull? They do veggies too. Oh, veggies. Yeah, 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 like that. What do you think about autonomous driving companies like Pony, WeRide? Those are all the Chinese ones. So that's kind of like your international Chinese autonomous driving play. They're basically, I feel like it's going to be so commoditized in the future. Like, my exposure to this, like, they're already losing a lot of money, but Pony is expanding. Nvidia is a shareholder here. Let's see. Pony AI achieves unit profitability in, I don't even know what country that is, Guangzhou, and plans fleet expansion to 10,000 vehicles by 2030. So they're doing, this company does exactly what Waymo does, exactly what Amazon Zoox does, exactly what Tesla robotaxis do, but they have their own cars, and it's they don't make their own cars, but they have like a fleet of cars that and they do it internationally in like that country right there. So actually, let me double check. If we go to the Nvidia portfolio right here, yeah, Nvidia does own a little bit of WeRide, and that's because WeRide's actually buying some Nvidia chips for the to like train their cars on. But anyway, yeah, WeRide. I don't love them individually. I pick the safer play of Zoox, which is my thing just crashed there, but we're back. Sorry if it lagged for a second. I think what I was saying was I think it's going to be really commoditized. The per mile, like a lot of Tesla's EPS in the future is pricing in like they're going to make this like 40 cents or whatever per mile of profit. And I'm like, I don't know about that. Um, Guangzhou is a province in China. Oh, hey, thanks for that, Egg Mayo. Good to see you. So let's check. Oh, I wanted to get to this one earlier. My bad there, Desmond. I hope you're having a great day. So this might be a Chinese stock, Fufu. They're called Bit Fufu. Um, so this looks like a Bitcoin mining company. So look at that, cloud mining solutions, self mining operations. So it probably you probably value this one off the value of their Bitcoin, but what's happening? Basically, this company just owns a bunch of GPUs, NVIDIA chips in a data center, and they're maybe converting it from Bitcoin mining to cloud hosting. I don't know, cloud mining solutions, or maybe they're one of those companies where you go on the internet, you just give them money, and they you basically rent out the GPUs for them. I've seen these websites before, where you just pay the money and they keep a big fee on it. It's a really profitable business. I don't know if they're actually well. So yeah, you basically give them money and they mine the Bitcoin for you, but with fee. Anyway, it's a bit they got 34 employees. I'd be real careful with that one. I probably wouldn't touch that one just because 'cause they're so tiny. Like, if I want to I like the picks and shovels play for crypto right now. Like someone said Weeble earlier, I love Weeble and Robinhood stock whenever you in SoFi too, where it's the picks and shovels, where if you do a crypto transaction, they keep a big little chunk. Futu's having a great day up. Wow, 4.5%. This is a stock I've been really promoting because I really think they have the DNA fundamentals of a multi-bagger. So I really do like food too. Okay, let's keep going. Some more here. Um, yeah, that is why Amex is down. You're right. If we go to AXP right here, American Express. If you're wondering why is this credit card company American Express down 4.7%. This is what's kind of being happening right now. The administration is proposing a 10% cap on credit card interest rates, which is good. I don't think these credit card companies should be milking the average American consumer with like it's this 10% cap only helps out the people who need help the most, that are super in debt, paying crazy interest rates. Like, as from a consumer point of view, I actually like this. Uh, if you're an investor, that's probably not good news. But yeah, American Express is cheap. This is actually Warren Buffett's second largest holding. Believe it or not, if we go to the Warren Buffett portfolio right here, a lot of people don't know this. 19% of his portfolio is in Apple. It's his largest holding, but 18% of his portfolio is American Express. It's such a big part of his portfolio. Berkshire Hathaway. Okay. Yo, what up, Skedding? Good to see you. Yeah, Planet Labs, they got a big deal. I contracted. Let's see right here. Check this out. Planet Labs are higher after the company announced a multi-year 9-figure agreement with the Swedish Armed Forces. So basically, the Swedish government. Isn't that crazy? So the biggest beneficiary here is actually, believe it or not, Google, and I am a shareholder of Google, so I technically have a super small bit of exposure to this stock. But yeah, if we go to the largest shareholder here, Google owns 10% of the entire company, and they bought their stake at a way lower price. But yeah, this is some satellite company. That's a crazy 9-figure deal. But yeah, they have a partnership with like Google Maps where they help like zoom in. They have these Pelican satellites right here. They just launched 2 additional Pelican satellites that really zoom in on the Earth and helps make it look more clear on Google Maps or whatever. Anyway, I wouldn't probably buy this one at current prices. I definitely wouldn't buy this stock at current prices, but I can see why the momentum is such in their favor because they like even before this contract, they already had great growth. Like if we go to their revenue, they were losing money, but if we go to the revenue right here, it's up 33% after 11% growth after 11%. So the growth rate's growing these 2 quarters. Actually, that might be from an acquisition. Look at that. Their assets just spiked up from last quarter to this quarter. If we go to their cash and investing activities, I bet, yep, look at that. They bought a company for $200 million. Makes sense why the assets gapped up like that. Okay, here. Um, let's see. Hey, what up, Christopher the Great? Yeah, just for one provenance. ALMU. Hey, Suzuki man, how's it going? Hope you're having a great day. Let's see. What was this other one? Nvidia is up like crazy. Do Nvidia. So let's do Nvidia. You know what? I haven't looked at Nvidia all stream. Yeah, Nvidia's up 1% on the day. Nvidia's AI platform drives drives the global memory shortage. I bet it does, yo. If you see Micron stock, SanDisk, they're all at all-time highs because of this memory shortage. But yeah, so much good news. NVIDIA's another autonomous driving play. Check this out. In the second line here, NVIDIA unveils Alpamayo AI platform for autonomous driving. So they check, it's like a LiDAR thing. They already have this automotive revenue where it's just like a Tesla robotaxi software. It's basically open source. You just got to pay NVIDIA for it. So yeah, they have an automotive business that's small. It's a small little bet for them. I like that because obviously what they're mainly doing is selling these GPUs for 60% margins. But yeah, look at their PC GPU market share. That's at an all-time high. They're making so much money right now because, the data center business, people needing GPUs, every company is trying to train their own LLM. And they all need NVIDIA chips. Microsoft and OpenAI, Oracle buying so many. The data center companies are as well. The cloud hosting business is huge, is taken off as well, needing AI chips. But anyway, if we go, here's why NVIDIA still has upside in my opinion. And if you buy NVIDIA stock right now at its current price at 186, I still think you'll get S&P 500 returns for the rest of the time. I still think you'll get 8% of your money back a year on average, even at right now prices. Here's why. We look at the forward PE right here. It's a 28. This current PE is expensive. You're like, dang, 46 PE, but the forward PE of a 28, that's where it starts to look more attractive because look at that. This is the EPS that's going to happen. It's literally going to go from 76 cents to $1.56 in 2 quarters. There's still going to be triple-digit EPS growth. And already this $1.30 of EPS they made this quarter is the same as $32 billion. Is $1.30. So it's literally going to go up to like 40 billion of net income, of real after-tax net income in 2 quarters. They're printing money. And if we look at their revenue right here, the revenue is 57 billion. On this 57 bill of revenue, they netted 32 bill. So their net margin is a 56%. It's just incredible. They're still like the EBIT's up and to the right, 47 bill in 2 quarters, up from literally 23 bill. Like there's still triple digit growth for the next 2 quarters. That's why I like NVIDIA. What is this app? Yeah, hey, Mr. Jur, this is actually a brokerage where you buy stocks on. If you want to use my affiliate link, it's in the link tree in my bio, very first link there, a brokerage called Moomoo. If you go and deposit $100, I'll both get some free stocks. But yeah, my favorite app to buy stocks on, free, costs nothing, no commissions. Yeah, broker called Moomoo, very first link in the link tree in my bio. What are your thoughts on Uber? Ooh, I want to get to Uber in a minute here. I want to get to ALMU. This is like an aluminum play, I believe. Or I don't know. I might just make that up. Semiconductor play. Okay. They have 14 employees, manufacture devices using compound semiconductor materials on large substrates. Okay. Well, they're at an all-time high right now. So congrats if you own the stock, you're definitely up. And they're still a small market cap. They're only worth $400 million. They just IPO'd in July. So they're worth $400 million, and they've just been up ever since. So they have revenue. So they do, but it's really tiny still, $1 million of revenue. $1 million of revenue. They're still, they made net income that 1 quarter. They just fortified their balance sheet, probably from dilution. Yeah, so they diluted you by 23 million, which was, 5% of the company, but it fortified their balance sheet so they can easily, they have, 38 mil of cash, so they can afford to lose, 1 or 2 million a quarter. Yeah, they only lose like 5 mil a year on average. So, as long as they keep up, as long as they don't lose any more net income, it's an interesting one. I'd be careful, because it's still such a small market cap and the revenue is just so tiny. You don't want to trust a lot of money in that name. But yeah, interesting. What's this app? Yeah, hey, this is a brokerage. It's in the link tree in my bio, very first link there. It's a broker called Moomoo. What was that? What someone said there? Can you look at Netflix, please? Yeah, let's look at Netflix. I haven't looked at Netflix yet. Let me try that one out. Oh, and Zeta. Hey, Two Trick, what's up? We got to do Zeta. Definitely a great day after hitting 150K short-term financial goals. Yo, Suzuki, man. Congratulations, man. That must feel great. The market is just going insane. That's awesome. We'll look at Zeta. That's a cool software name. And AVAV, I've not looked at that one yet. We'll check that one out. So here's Netflix. I think they're pretty attractive to buy at current prices. Dang, someone said, can you do NVIDIA next? The very last stock we just looked at was NVIDIA. If you want, go on my YouTube stream. My YouTube channel is called Nathan Roberts, also in the link tree in my bio, but type into YouTube Nathan Robert. You can rewind the stream by like a couple minutes. We just did a full deep dive on NVIDIA. So here's Netflix. They are at a fair price. They really are. They're at a 28 forward PE. Now, this PE doesn't include all the Warner Bros. Discovery acquisition news because Netflix is trying to buy Warner Bros. Discovery for $82 billion. But now there's Paramount Skydance bidding 100 billion. And as the price continues to go up more, because it's already decreative to Netflix EPS, it's going to be even more decreative to the EPS. So that's why the stock, I think, has slowly been going down. I don't know how investors are still trying to digest this acquisition. But what I do know at the end of the day is that Netflix is a great business model. It's a subscription, uh, a lot of people would cancel their Netflix subscription last before they'd cancel anything. But the forward PE of a 28 seems very fair. They have 300 million premium subscribers. They make obviously $11.69 per month per user, and they print net income like you're buying a business that makes 3 billion or 2 to 3 billion of after-tax net income a quarter. Same with free cash flow. And this company doesn't pay a dividend or do any share buyback. So they're making $3 billion a quarter. That's how they're able to afford, like this $83 billion merger with Warner Bros. Discovery. I think some of it will use shares. What's this? Netflix expands WWE partnership to host premium live events library. Hey, that's pretty cool. WrestleMania, Royal Rumble is going on there. Anyway, yeah, actually, it'd be cool to see all like the Warner Bros. Discovery, like the Harry Potter and stuff on Netflix, just adds more to their content. So I think in the long run, financials will outshine, and I think it's worth to nibble. I wouldn't make it a big size position yet. Like if I wanted this at 5% of my portfolio, I wouldn't make it 5% today, but I'd start the nibble at like 1% because it is a great business model, excluding all the Warner Bros. Discovery noise, because Netflix is like trying to not buy the studio business, but like just the streaming. It's kind of complicated. We up on Amphenol? Yo, heck yeah, dude. Amphenol is at a crazy new all-time high today on a acquisition of CommScope, which I've been saying forever. They announced it's more accretive to the EPS, just like I've been saying. Amphenol buys CommScope, and it's even more accretive to the EPS than expected. I- I'm glad they're doing great. Okay, let's see here. Oh yeah, let's do Zeta real quickly. This is a software name that's really gained some traction. I know a lot of software names are doing like really good recently. I think like UiPath has been up a bunch. Yeah, UiPath is up. But here's Zeta Global. They've had a great past week. They actually announced a partnership with OpenAI. Let's see if we can find that news. It might be gone. Yeah. Zeta announces a strategic partnership with OpenAI to integrate AI models into Athena marketing platform. Anyway, if we judge them off their financials right here, they look great in terms of revenue growth. Revenue's up 25% after it grew 42. After it grew 25, which is how, yeah, hey, again, this app is in the link tree in my bio, very first link there. And they're super net income positive. So the revenue grew 25% year over year. And look how they narrowed their losses. So they used to lose a lot of money, like 30, 40 mil a quarter, but it's all narrowing every quarter, every year. So they're barely losing any money to where this time next year, they're going to be making net income every single quarter. So that's why if you look at their current forward PE, it looks super dog expensive, 430 forward PE, but you got to do like a 2 or 3 year out multiple because everything's still like analysts know that they're just now getting EPS positive. So the revenue is still going to have great growth. Revenue is going to go from 264 to 362. So anyway, I like Zeta. I keep the allocation small for now. Yeah, like they're already making operating profit. They were already net income positive this quarter. Yeah, they made net income. Anyway, they're deleveraging too. Opening a partnership. I really like the software name. I just keep the allocation right now to that one. That probably this risk reward a little small. I bought Zeta 2 weeks ago and up 20%. Very nice. Heck yeah. That's really good. So Tui said Palantir. Yeah, we haven't done Palantir today. This is a growth behemoth. It's a phenomenal stock to buy and never sell. Hmm. A lot of the revenue actually comes from the government. A lot of police stations, military all use their government software solutions, and that's 53% of the revenue. And check out how it's growing. It's up 55% year over year. After grew 33, after grew 12. Like that's phenomenal government revenue growth. And it's not just the government revenue growth, it's also the commercial side, which is the other half of their business. The commercial side of revenue grew 73% year over year. After grew 26, after grew 22, like phenomenal. Is the YouTube stream up? Yeah, the YouTube stream is up. I had a little glitch at the beginning, so I had to like restart, delete the old stream and start a new one, but I do believe it is up. But yeah, Palantir, everything here is headed in the right direction. They're beating on expectations every quarter. The revenue hits a new record, up 63% year over year. Hits a new record profitability every quarter. And a cherry on top is they have no debt. It's a completely debt-free company. We're just adding on to their cash pile every quarter. Someone said, can you show your portfolio? I'll screenshot it. Well, actually, you can go to my YouTube channel. It's called Nathan Robert. you can just type into YouTube Nathan Robert. It's also in the link tree in my bio, but type into YouTube Nathan Robert. You'll find I just made a whole entire stock portfolio update, and you can like rewind the stream. I actually have multiple portfolios, so there's a lot of stocks to kind of screenshot here. So I recommend just going to my YouTube channel called Nathan Robert to see all the stocks I own. I definitely own too many. Okay, let's look at some more here. What up, Jace? Good to see you. What'd you say about Netflix is worth buying? I think Netflix is worth a nibble on. Yeah, if you missed the Netflix analysis, I would recommend checking that out. Like, go on my YouTube channel, Nathan Robert, or stream it on there. You can like rewind it. AVAV. Let's check this one out. AVAV. They recently landed a 5-year, $800 million plus contract with the DoD for multiple drone UAV integration. So that probably explains, yeah, they did like a $1.4 trillion thing. That probably explains why they've been gapping up. Let's actually see if we can find any news. Probably not. Or yeah, check this out. AeroVironment drones highlighted in the U.S. military operations in Venezuela. So the literal U.S. government's already using their AeroVironment, I guess, drone. So this is a drone play. Proposes $1.5 trillion defense budget increase benefiting AeroVironment's drone portfolio. AeroVironment collaborates with Perry Labs to upgrade P500 drone for U.S. Army long-range reconnaissance program. Okay, let's look at their numbers because that's what matters right here. So revenue is great. Look at that. Triple-digit growth the past 2 quarters, up 150% year over year. And were they profitable on that? So they barely lost any money. So they're barely losing any money. Look at their balance sheet. They're super they have no leverage. This is a great balance sheet. Looks like they just bought a company. That's why their assets literally went from 1 billion to 5 billion. They bought a company for over $1 billion. So that's probably explains a little bit why there's even more growth than normal. So yeah, if we go to the expectations, they're just up and to the right. Revenue is supposed to go from 275 to 585, and the new government highlights. So I can see why this one's done so well. They're probably one of the best drone plays out there because they have real revenue. So yeah, autonomous systems and space, cyber, and directed energy. So pretty cool. It's like Ukraine is 18% of the sales international, then US is 47%. So yeah, a little expensive, probably tough to buy at this current, definitely expensive at this current price, but I see why you like that one. Thanks for your take on Zeta. Put them on my watch list. Hey, yeah, Zeta's an interesting one. When's a good time to get into InnoData? Still not yet. They're expensive. This you always want to keep this one as a super small position. So InnoData, I do own this one on my Roth IRA. Everything here is so impressive. Their financials and the stock has been a like insane performer. Not so recently because they're all-time high, but check out the expectations. Every quarter they beat on revenue, like they expected 59, they did 62. They beat on revenue, they beat on EPS by double, and they beat on EBIT. So they really are triple beating every quarter. Revenue is supposed to jump up to 72 million. Their main customer is Meta and Google. Also, Apple, Microsoft, and Nvidia are all also customers, which is pretty crazy. And they're already making net income every quarter. Again, this was a one-time adjustment they had, so the profits actually hit a new record this quarter. Super deleveraged to the balance sheet. Liabilities went from 46 to 36% of the assets. InnoData is a behemoth. They're also expanding they expected like 20 million in new annual revenue from their new federal contract program with the government. So that being said, they're really expensive at a 56 forward PE, but they kind of just are making net income for the first time. And, EPS is going to be up and to the right, especially if they keep beating 100%. So it might even be a cheaper forward PE. It's not crazy expensive here, but I'm certainly not allocating any new money. I do want to get to the psychological 10th share eventually on InnoData. I don't own much of them, and I never recommend this as like a huge portion of your portfolio because they're a micro cap. They're only worth, well, not that tiny. They're worth like 2 billion, but yeah, I'm up 86% on them. We've kind of owned them for a while. I do want to get a 10th share, but I'm not allocating. Dang, they're already up 17% year to date. Pretty insane. Yeah. Roth IRA, we're still barely green on the day. We're up 0.03%. Let's go. Hey, there was a big Walmart and Google deal. You're right. Let's get to Walmart real quick. I freaking wanted to get to Uber too. Hendra, keep reminding me because I definitely want to get to Uber and Webull too. I'm so sorry if I'm missing these in like MDA. Hey, what up, Plasma? Good to see you. Yeah, AVAV, that's a pretty interesting drone play. So here is Walmart, new all-time high, literally all-time high on a boring Walmart. It's always the boring stocks that do phenomenal. Like Waste Management's at an all-time high. So yeah, wow. Whoa. Walmart is going to join the QQQ. Walmart is joining the NASDAQ and replacing AstraZeneca, the that pharmaceutical company. But check this out. Walmart partners with Google to launch AI shopping feature in the Gemini platform. And another cool thing, Walmart to expand their drone delivery service to 150 more stores by 2027. Hey, maybe Walmart's a drone play, but hey, that kind of cuts employee cost, you know. You just order something kind of like Amazon, they just get it delivered by drone. But anyway, kind of cool here. Walmart's super expensive, like more expensive than like all the Mag 7 X Tesla. Yeah, 41 forward PE, but it's just such a safe business model. They're trying to get into like what Costco's doing because they Costco does great. So they have like a Sam's Club. Walmart owns Sam's Club where you know you have to pay for a subscription to get into the store. Whether you go to the store or not, they collect that subscription revenue, and you love going to the store because you get a great deal. But look at Walmart's bottom line after tax net income. It's easily 4 to 7 billion of net income a quarter and you get a 0.77% dividend. They're just really expensive at a 44 forward PE, but yeah, Walmart's doing really good. Is that why my Google and Walmart are up today? Yo, you own Walmart, Suzuki, man? You gotta be a happy shareholder. That one I regret not owning. You know, I own Sprouts Farmers Market and Amazon. You know, Amazon and Walmart are kind of okay, so here's Uber Technologies. So this is a phenomenal software name that I think you should just buy, never sell. Let's see right here. What's their Uber Lucid Neuro Unveil Ready Robotaxi with level 4 autonomous. NVIDIA Alpimeo. Okay, let's go look at their. This is what's crazy. If we look at a forward PE metric on Uber right here, there's like next time, basically next year's net income, they're trading at 25 times PE. You look at the current PE, it says a 10. It's not actually a 10. They had some one-time adjustments, but they really do trade at only 25 times next year's net income. And here are a few cool metrics we get. This is their monthly active consumers. So not just monthly active users, but monthly active consumers are 189 million versus this exact same time last year was 161 million. So that's growing. You know, everything's growing. Like the mobility revenue, ride sharing, that's up 19%. After grew 26, after grew 33, phenomenal growth. And on the Uber Eats business, the delivery side, that's up 29 after 18. So that's also at a record. Both businesses are all hitting a record. And, you know, here's the free cash flow, easily 2 billion plus of free cash flow every quarter. And on net income, it says they made 6 billion this quarter. This is what I was talking about. They didn't actually make 6 billion, but they did make a record this quarter over $1 billion for Q3, 1.11 billion. It was great. So anyway, Uber's a great one. Just they don't own any cars, but every time you book a little Uber, they just keep that little fee. So yeah, Uber's a nice one. Probably over diversified, but there's just too many great companies. Yeah, I mean, I feel you on that one. I bought Walmart before, didn't expect it'd do that good. Should I sell? You know, I really wouldn't sell Walmart. Maybe slight trim on Walmart, but definitely do not fully sell out of Walmart. King Louis says, I'm up 1.44%. Is that good? That's great considering, you know, you can kind of just compare your portfolio daily performance. I like to compare it just to the S&P 500. Oh, wow. Look at the markets today. Dang, new intraday high right now. So if you go check your portfolio, you're most likely at a new intraday high. But yeah, look at the S&P. This morning we were really red, you know, negative pre-market, but now we're just up and to the right. A lot of this, I think, was from Google doing the deal with Apple. I don't know. Yeah, Google spiked up on that. Now they're back to an intraday high. Actually, pretty much all-time high. Okay, let's look at some more here. Um, um, Ooh, which one should we look at here? Marcus said, what about GMAB? What do you think about GMAB? What's up? Let's check this one out. GenMab. Oh, yeah, I remember looking at this one. I put them on my watch list, actually, because they're pretty interesting. So they've had a great past couple months here. Let's go see exactly what they do. So yeah, they sell a bunch of different prescriptions and at a very high margin. And their largest prescription right here, Darzalex, they're kind of like a mini AbbVie. I like the growth here. It's up 17% after 26% growth, and that's just one prescription. They also have their next biggest one, Kesimpta, whatever. That's up 50% after 65. So that's even more growthier. You know, their next biggest segment, net product sales, that's up 48% year over year to a crazy new record. So that's what I actually really like about this one. But do beware, 92% of all the revenue does come from Denmark. But it doesn't really matter where they come from, where the profits come from, because if the profits are here, then it's all good. But check out this specifically. The revenue was exactly $1 billion or 1.02, but the revenue was exactly $1 billion, and they kept in net income $400 million. That's after they paid 59 mil of taxes. So they literally kept, or they have a 40% net margin, and they really do. So, and another cherry on top is the fact that they have a fortress balance sheet. They actually have no debt on the company. Let's see the cash on hand here. So, $3.41 billion of cash, no debt, and the whole market cap is, 20 billion. So, literally 15% of the market cap is their net cash on hand, and then so 15% of the company is basically free, and then you're buying just a business that makes 40% net margins. Yeah, crazy beat on EPS this quarter. What's the forward multiple? Okay, a 31. So 31 forward PE might not be that's probably fair. Maybe a slight bit expensive actually. So actually it might be a slight bit expensive at this current price, but I can definitely see why this stock has just been up and to the right because the fundamentals do really look great there. No way. Yo, shout out to King Louie with the crazy hand heart gift. I really do appreciate that, King Louie. He says, actually, QQQs are almost breaking out. Let me check out the QQQs for you. And I actually have a life hack for you. So here's the QQQ right here. It's literally just the NASDAQ 100. Today they announced Walmart is going to be added in here. So this is like the more tech-heavy S&P. It always gives you, like, look at this performance. It always gives you around 8 to or actually closer to 10% of your money back every single year because, its top holdings are so great. NVIDIA, Apple, Microsoft, Amazon, Meta, Alphabet. So, there's 100 stocks in this list. Walmart's in there, CEG, Constellation Energy's in there. And yeah, it's doing great. And I have a little life hack for you. So actually, a really cool thing is QQQ recently did this because they had to, because they're getting so much competition. They just lowered their expense ratio fee in December, literally like December 25th. The expense ratio on the QQQs just went down to only 0.18. But if you want to save a slight bit more, it used to be 0.28. They like cut it in like by 40%. It was great. QQQM's the exact same ETF, but only a 0.15% expense ratio. So it was slightly lower expense ratio, but same thing. But anyway, yeah, I love the QQQ. You can't bet against them. A lot of people, the average person can't outperform the S&P, and the QQQs historically do better than the S&P 500. So a lot of people can't outperform the QQQ. So if you can't beat it, you always got to own a little bit of it in your portfolio. Then you'll never feel left out. And thanks again, Louis, for that crazy gift. If you get another stock you may look at, let me know there. Yeah, here's Micron right here. This is the memory shortage play. They're now green on the day, just like I thought. This is crazy. So the memory shortage, they said is caused by NVIDIA. Let's see. Micron Technology projects memory supply shortage until 2028 amid AI demand. So yeah, they're literally significant capacity expansion, massive backlog on this company. RAM prices are through the roof, SSD revenue. This is why I wouldn't sell Micron. If I was a shareholder of Micron and, you're probably up like crazy, I wouldn't really sell or trim out of this one because of the forward PE here is an 8.9. Only a 9 forward PE for the growth. Like literally the EPS was $4.60 this quarter. It's going to be $8 next quarter and then $9 a quarter after. So if you think about that, you annualize that number, that's almost $40 of yearly EPS, and it's not even a $400 stock. So they're trading at less than 10 times next year's net income. And that's where you get the forward PE from. The forward PE is a freaking 8.9. It's phenomenal. So if the RAM supply chain issues start to fix up, this one will probably go down, but I still expect another 20 to 30% upside before this really maxes out. And it sounds crazy, like it's already at an all-time high, but I really think it could stretch up to like a 12 forward PE or something before it really maxes out, or even higher. Does QQQ have more volume? The volume never matters on ETFs. Volume's completely irrelevant. It's like the net asset value. At the end of every day, an ETF always goes back to its net asset value. That's where market makers make so much money. But yeah, if there's a very small ETF out there, no one person can manipulate it from no volume because at the end of every day, it balances back to its net asset value. And if it's below or higher, the lower market makers just keep the difference on there from people doing market orders. But yeah, anyway, QQQ and QQM both are great. I actually, now that QQQ's lowered the expense ratio, I also just like that one. GLW, is GLW at an all-time high or up like crazy? So yeah, Amphenol hit an all-time high. This one's not at all-time highs yet, but yeah, there's like a smaller Amphenol with a bit of a higher yield if you like a higher yielding Amphenol. Can you try, Craig said DG. Let me actually get to Dollar General right here. I've not looked at this stock in literally, I can't even tell you. And then sadly, I gotta go. Dang, my college class starts in 50 minutes. That's why I have to end the stream. Well, actually, we've been streaming for a while. Actually, every Monday, it's going to be my new time when I stream. So anyway, Dollar General, what's their forward PE, actually? Let me go down here. They're trading at 21 times forward PE. That's pretty cheap, but they're also, a dollar store. So they have single digit revenue growth. Like the revenue's only up 4%. Like single digit growth is what they've grown at, but they still make really good net income. If we go to their net income bottom line, they're easily making 200 to 400 million of after tax net income a quarter. So easily great net income there. Uh, yeah, earlier today, I already had my macroeconomics class. Now I have to go to my English 2 comp class, which will be not fun. But yeah, but I got to drive back and forth to campus twice on Mondays, which sucks. But Dollar General easily makes like 3 to 400 million net income a quarter, and you get a 1.6% dividend yield. Let's actually go see how much the dividend costs. So they're easily making, we'll say, these past 2 quarters were great. Did that beat on earnings? Yeah, look at that. They've been beating on EPS. They've been beating on net income and EBIT for the past 3 quarters in a row. So that's probably why the stock has done great for 3 quarters in a row. They're really beating on net income. So they're making like 300 to 400 mil in net income a quarter. And the dividend only cost 129 million. So they can easily afford the dividend, and you can afford to raise it. So anyway, no complaints about Dollar General. It might just be a little boring, Obviously, I heard someone say like Amazon's the new dollar store because similarly priced stuff, but they've done good. Um, Let me see here. Powell Industries. Ooh, wait, SABR. What's SABR? We'll get to Powell Industries. This is Seabury. Okay, so yeah, dang, they're at an all-time low, only worth $500 million. So we probably won't really cover this one. We'll spend like 20 seconds on it. But yeah, I don't love buying stocks at all-time lows. Revenue is up 3% year over year. That must have been a one-time adjustment. So that's the weird part. They're having these weird adjustments. So they're actually making like 80, 90 mil a quarter, but they're really leveraged though. They have a lot of liabilities. They just sold an asset. Look at that. So cash from investing activity, they just sold off one of their assets for $1 billion. And that's how they deleveraged from 132 to 121. I don't know. I'd be careful here. Some oil and gas play, they've been one of the worst performing oil and gas stocks. I'd just be so careful there. Maybe like a swing trade to buy the dip on it, but yeah, hey, Oklo's super risky. I don't think we'll really cover Oklo. That's a nuclear play that's not going to have any revenue for a couple years. If you like Oklo, you'll love CEG, Constellation Energy, the best nuclear stock. They own 30% of all the nuclear assets. So let's look at Powell Industries real quick. Let's do it in M. So Powell Industries, I'm a shareholder of this one. I'm up crazy. And here's why I'm not trimming or selling. Even though this is my buy never sell portfolio, if I didn't have that rule, I still wouldn't sell Powell Industries because they're at a 25 forward PE. So 25 times net income, but it's even cheaper than that because if you look at the market cap in the top right, the whole company's worth 4.7 billion and they literally have 470 million of net cash on hand. So 10% of the whole market cap is just their net cash on hand. Then you can subtract another 5% for their inventory. And you're basically just buying a company that's printing money. They have a huge $1.5 billion backlog, which is 30% of the market cap. It's just a great electrical infrastructure play. Like 50% of the revenue, though, does come from like the petrochemical, oil and gas industry. So sometimes they're actually, they really don't move because the data center / like a utility business has been booming for them. So they kind of used to trade somewhat with oil commodities, but they just print net income every quarter. They have a small dividend, a 0.27% dividend. Oh yeah, and they have 475 million of net cash. That cash isn't just sitting there doing nothing. They're earning interest on their cash. And I have a bunch of YouTube videos where I go over Powell Industries as well on my YouTube channel if you want to check that out. But yeah, they made 4.3 million of just interest on their cash. And they made 4 million of interest on their cash and they pay a dividend. And that dividend, I kid you not, only costs $3 million a quarter. So they're literally making more interest on their cash than the cost of the dividend. And a 25 PE, 50 million net income a quarter already well covers the dividend. But look at these EPS projections. They expected 376, they did 422. So they always beat on EPS. So that's why I like Powell Industries, and I wouldn't be trimming out of this one. I bet it's probably going to continue to all-time highs, like hopefully 440. That'd be crazy. I'd love that. Comfort Systems is going up on the day. That's great. CEG, what was it? Yeah, let's cover this one real quick. So CEG right here, they literally already own 30% of all the US's nuclear reactors, and they're kind of on a dip right now, down 9% year to date. But they have these fully amortized, fully paid off nuclear assets built from decades ago that just print money every quarter. They have the number one geothermal. They're the number one geothermal play, nuclear play, and unregulated utility play. They have a huge natural gas business as well. Where our house, literally, we have a bill with Constellation Energy. They're provider of natural gas, but this is also a big just nuclear play. I think this is going to be the growthiest utility company out there, and that's why they're basically the only utility I own besides Southern Company, because I think they're going to be the growthiest and they're the best. They have such a low dividend payout ratio. They do buybacks. They do M&A. CEG is the best, and I like it just more over Oklo. Like you can look at Oklo. They had like this deal with Meta, but I want to see if I can find that. Where pre-construction is planned for 2026 with full capacity by 2034. So it's going to take till 2034 to get their first ever stream really of revenue. But yeah, this is Oklo. It used to be owned. CEO used to be Sam Altman, but he stepped down. He's like the OpenAI guy. But if we go to this company's revenue, it says zero because again, it's a startup. They've never sold anything, not a product or a service. They're trying to make these SMRs, these small oh my gosh. I gotta go in a minute. That scared the life out of me. Why was it so loud? I don't know. But yeah, it says no data here on the revenue because they never sold anything. And there's only 2 working SMRs in the world, and neither of them are in the US. So I don't love the SMRs, but I love the CEG play. All right, we'll look at one. What do you think of the SMH ETF? I love the SMH ETF. This is the semiconductor play. If you don't know which semiconductor play to buy, like if you're like, I don't know whether to buy NVIDIA or the people who make NVIDIA, which is Taiwan Semi, or Broadcom as a TPU play, or buy the Micron or the memory shortage via Micron, you can just buy this whole ETF right here. And I know no investor is disappointed in the results. This is also a great ETF to put on your watch list to buy the dip on the next time there's a tech dip. There's eventually going to be some tech crash where maybe it falls back down. You definitely don't buy it at this price, but you put it on the watch list where if there's ever a big tech crash, you could get into a pure semiconductor ETF play right here, sector play, or you could pick and choose, just buy NVIDIA or something. SMH has actually outperformed NVIDIA because NVIDIA has been flat for a while, since like May, but Micron and these other memory shortage stocks like ASML, the lithography company, have been pumping this up even higher. So it's almost been like a better performer than NVIDIA, which is just crazy. I'm determined to invest and inspire from living in a minivan to a mushroom or vehicle. Hey, really, that's awesome, Christopher. You're doing the right thing by focusing on your finance. Again, the goal isn't to get rich quick here. The goal is to just slowly build and preserve your wealth. With the S&P 500, you just buy this, you get 8 to 10% of your money back every year, and it's really that simple. The goal is to get rich quick. You just turn $100 into 110, and then 110 goes to 125, as it compounds up higher and it snowballs up. So the longer you're in the market, the more it kind of compounds up for you. But yeah, the sad part is if you're these super new investors, if you're like investing for the first time, it's so tough to buy really anything with a meaningful amount of money because literally the S&P 500 right now, this second, today, is at a new all-time high. But it's just going to continue to hit all-time highs, but it's just tough to buy anything right now. So that's what sucks. But yeah. All right. Yeah, I definitely got to go here. Maybe we can slide in one more. SCHX, what is that one? SCHX, the Schwab US large cap ETF. So yeah, this is an S&P 500 alternative. They just call it the large cap ETF, but it pretty much does the exact same thing. Nearly identical holdings, market cap weighted, NVIDIA, Apple, Microsoft, Amazon, Google, Tesla, Berkshire Hathaway. So yeah, SCHX is just a large cap. Basically should do the same as the S&P 500. So anyway, let me end this with a quick portfolio update. I'm sorry if I had to cut this one short. I got to go to class, which sucks, but anyway, we stream every day. If you want to hit the follow button, I stream every day. I sell nothing. I have no course book, WhatsApp. If you want to support me, the only way to is subscribe to my YouTube channel. It's called Nathan Robert. Oh my goodness, you'll love this. I don't get much views on my videos, but if you wanted to be my 50th view, go to my YouTube channel called Nathan Robert. I made a video called 10 dividend stocks to buy and never sell. I just uploaded it today. So maybe you're like, oh, it's from the stream. But anyway, see you all soon. Or let me do the portfolio update. This is my Robinhood account, dividend only portfolio, where we're already doing pretty good. We're up 4.43% year to date, 18% the past year. Every stock in here pays a dividend. Most of that growth has come from Google because Google's just up 75% the past year and we're up 100%. We bought the dip on them a little earlier. And then the bottom, but yeah, here's my total percent change on every stock. Luckily, we're green on every stock in here. Kind of the dividend stocks have been rebounding. We're still slightly down in our Roth IRA. It hasn't done too well. We started this a year ago and we're only up 0.5%. Hasn't worked too well. A lot of that's from Coremedics. They had a nasty little tank down 34% this week, 39% the past week, actually. I did buy 2 shares of them today. And then we have our Webull portfolio, kind of like our risk on account. We're only up 21% all time. We're up 1.2% the day. Hey, Futu's doing great. UiPath, AMD. So here's all the stocks that going in here. We have some winners and some big losers. Like we're down bad on Sprouts Farmers Market and UiPath, and even some stocks that I've completely sold out of. Like I took a big loss on ChargePoint, like a couple $1,000 loss. So yeah. Anyway, I'll see you all very soon. I might even try and do a live stream later tonight after I get back from school. But anyway, see you all very soon. If you want to support me, check out the YouTube channel, Nathan Robert. You just hit the like button, hit the follow button. Watch out for people in person to me. I'll never follow you, DM you. I sell nothing. So thank you all very much. Thank you. See you all, everyone. Hey, thanks again, Looney, Plasma, Brian, to all the members. Thank you very much. Craig, Christopher, Mr. Gurdon. Thank you, everyone on the YouTube stream. I really appreciate y'all. Thanks for watching.